What's up, guys? How's everybody doing? Just give me 1 second. I, fingers crossed, think that the microphone situation has been fixed. Fingers crossed. Give me 1 second. I'm going to put the chat on the screen. Wait 1 second. Chrome extension. See, it's not on there yet. Where's the live chat? Where's the live chat? Nope, that's not it. Where's the live chat? We'll figure that out in a second, maybe. Actually, no, that's... I see what I'm doing. 1 sec. Send to back. Move to bottom. And you guys can hear me? Just give me some feedback on the sound while I do this. There we go. Cool. All right, now let me check what the feedback is about the sound. Okay, what's up? What's up? Sound good? Mic sounds crispy. Wow. What a sigh of relief. So, this is so stupid, but sometimes that's all it really is. It's just a simple fix. So, here's what happened. And I'll drag we'll go to the regular screen in a second. Let me give everyone a second to hop in. As a reminder, my name is Ryan, aka Cantering Clark. On behalf of myself, my partner Josh Rager, I want to thank you guys for tuning into the BlockRoots YouTube channel. I'm trying to always provide you with non-sensational approach to the markets. If you're not already a subscriber, go ahead and hit that subscribe button. Hit the like button. We really appreciate that. We definitely appreciate when you hit the like button. We want to continue to make these videos, and we need that little dopamine fix. This YouTube, right? This channel is sponsored by our partners at Phemex. So as you can see on the next screen, it's going to be a little link at the bottom right-hand corner of the screen. It's going to be Phemex.trade. If you go to use that link, you'll get access to whatever promotion that they're running. If you don't get access to a promotion, let's say you sign up and you're like, hey, where's my $80 or $100 or $500 sign up, depending on what they're doing, or where is my discounted taker fees, just go ahead and reach out to me. I'm making sure that you guys get that stuff, right? So go ahead and check out Phemex.trade. I'll pull up the webpage in a second. It appears like the sound is doing really well. That's awesome. So we'll get to it, right? We'll go to the live screen. So here's what happened, guys. Check this out. And welcome for anyone who's new. This is what happened. So on my OBS, this is what it was looking like. Okay, you see how this is smaller? Because I normally, I have a 50-inch curved screen. I have a big monitor to my left that's 2 feet. It's a vertical screen. But I try to make good use of the screen that I have that's the big curved one. So when we're doing a stream, I'll have the chat, I'll have the web page open, I'll have Quant Tower, I'll have OBS. And the way that OBS was compressed was so that I couldn't see this down here. So this was taking in, whenever this is on, this is taking in a different mic source. So, I spent the last, I feel like, month and a half trying to figure out the ghost of the machine with this. And meanwhile, somehow I popped this out and I saw that these two sources were coming from different sources. So this is from my Yeti and this is from a built-in mic that is actually on the other screen. So, Jesus Christ, that was a pain in the ass, right? But I'm glad that we got the sound going. Go ahead and hit the like buttons, guys. Again, I want to try to get the likes up as high as possible. Got a lot of viewers in this one. This is going to be good. We're going to be talking about a few things. Obviously, there's a lot to talk about. Yesterday's drama gave us plenty of material. So hopefully in the beginning, we'll zoom out and give everyone a little bit of consolation, offer some consolation. I know that in crypto, it's a popular sentence when things go wrong to say, zoom out, right? And I'll go over your questions in a sec, guys. I'll take a look at that screen in a second. I know that's a popular thing to say. And for anyone who's new to the chat right now, I just introduced myself. My name is Ryan, aka Kenner Clark. Partner is Josh Rager. We are sponsored by Phemex. This is a spot contract and USDT yield generating platform right now. So now they offer yield as well. It's up to 10%. And something new, I like to share things when there's something new coming out. Otherwise, I don't really like to just shill stuff. We're partners with them because we think that they are a great team. It's a great exchange. I use the exchange for a lot of my DeFi alt trading for perpetual swaps. But they are coming out with some new and exciting pairs, hopefully this week. And I'm really confident that this will make a lot of people happy, because this was long overdue. So if you just look at the pairs that they're offering right now, spot and contract, and this is just an abbreviated version of them, it's like some dinosaur stuff, right? Minus some newer things, but it's about time that they're adding these new pairs. So, sign up whenever they add them, by all means. Don't use the exchange until you're happy to use it, but this is coming in the near future. So in crypto, we always say, and good morning, good evening, good afternoon, everybody. In crypto, we always say zoom out, right? Zoom out, things went wrong, zoom out. And I think that it's such an often repeated phrase across this market, because there are a lot of people that are literally trading in and out of the higher time frame, off of the higher time frame structure on the lower time frames. You have people that have what would be considered long-term investments and position trades in Bitcoin, but they kind of manage their trades sometimes like they're trading the intraday, right? So, we could look at a higher time frame Bitcoin chart all day and zoom out and see like, oh yeah, 6 months up in a row after the first major break in market structure, beginning of a new trend. Like, we haven't had a red month yet. Maybe if anything, if I'm on the sidelines, there are a few conditions I might want to wait to enter in on. Market can continue to get away from you, but when you zoom out, you see like how strong this market has been. But the problem is, you're seeing something, for example, like you could take something like this, the break in market structure over here, major contextual break, major change in market structure. You get a move through it on the 5 minute, and the first 5 minutes it's passing through there, and then you have people that are making long-term decisions off of that. But there hasn't been a higher time frame close. And then you have a higher time frame trader, someone who's trading based on the higher time frame swing trading. Maybe suddenly now this is a good enough reason for them to long this in their portfolio as just an investment. And they're in an investment now, but they're looking at the chart every 5 seconds. So you do have to kind of remind people, I think, in crypto more than any other market, to zoom out. You don't have to remind people. If you are a long only, if you're a portfolio manager and you're a long only fund, or you are a pension fund, any higher time frame participant, when you put a position on in, let's say Kathy Woods, you put a position on in Tesla, you don't look at the chart, really at all. You might look at the chart, but you're not looking at it every day. You're not making decisions based off that. So I think that's why, people they're having this thing that is called style creep, where if they, it's time frames creeping into each other, styles creeping into each other, different approaches that you should have separated and compartmentalized. All right. So yesterday, this hit the market, right? This has kind of been like, Biden's been saying this for a while, and he doesn't, and I don't want to get too much into this because it's not my area of competence whatsoever. I'm very frank when people ask me questions that I don't know much about. I'm just like, it's not me, man. Like, I'm not going to fake an answer for you just to mentally masturbate myself. But Biden's been talking about this for a really, really long time. Corporate tax rates haven't been priced in, I would say. This has been more or less known, but apparently it wasn't priced in completely by short-term traders, because they're going to be they're going to be more likely to have a knee-jerk response to things. So yesterday we did see this knee-jerk response, right? Biden doesn't really care about the stock market. So honestly, it's not like he's trying to penalize anybody. He's just, you could tell he's not a president that really cares about the performance of the stock market. Some presidents, they look at the stock market performance as sort of a score for how they've performed, right? Whether that's incorrect or correct, right? Someone else can debate that. So the important thing to understand with this is that, one, this is like, first of all, the 80% crypto tax, that's a complete bullshit rumor. All right. They would never do that. That would completely stifle any good innovation. And you're supposed to have a do no harm approach. And there's plenty of people that would stand in the way of that. That would not happen. I would say that there's obviously a non-zero chance, right? Infinitesimally small chance, but it's something that I don't think you should even entertain in your decision making. Tax hike, yeah, this is something that's known though, and honestly, it's not going to affect more than 1/3% of people in the United States. But this pisses off people, and short-term traders respond. One thing to point out, he says, what is it, 43%? More realistically, some places it might add up over 50 for people. But the truth is, this is just this is how politicians, this is how people act, right? Whenever they are going to quote a number, whether they're negotiating, whether they're just coming up with a certain figure to attach to some kind of proposal. A lot of the times they'll do something called anchoring, and it'll be either, this might have been involuntary or it might have been voluntary, but you anchor, right? If you are trying to get something passed, and you and I are sitting and trying to negotiate over something, let's say that I want, we're trying to agree on, the cost that you should pay me for something. And, the person who makes the offer first is probably in a better position because they get to anchor the other person, right? So I say, let's say something is, let's say fair market value might be $50 for something, but really there's nothing available right now. I am one of the only people right now who's willing to sell. I know that I could sell it for 55, but why don't I say that I'm only going to sell it for 100, right? Because then I've just anchored you to a much higher price. Your counter offer at that point is going to be lower than 100, but it's going to be higher than where I probably would have been happy with to begin with. So something like this, he's going to hit him with some sort of exorbitant figure, and odds are it's probably like 27 to 30%. All right, if that goes through. Okay, so markets overreact. That's what they do. They underreact and then they overreact. And if we look at the ES, the thing is back above where it was yesterday. So that should really give you a good idea of what the market feels about this now, right? This is, again, short-term speculators. This is what happens, okay? No bigger players dump their positions because of this. There are some big idiots in crypto that did, that really wanted to get out. But that was pretty good because their flow was actually worth paying attention to since it was higher up than where we are now. Whether they had a good finger on the pulse and they, maybe they don't want to be out, but they knew other people would want to be and would freak out. So they sort of got out a little bit before that news hit the wire. So ES back up, S&P back up, and Bitcoin is sort of slow to follow. So just to zoom out really quickly, BTC, we're looking at what is the first month that is an inside month. So you have 1, 2, 3, 4, 5, 6 months in a row of just continued progress, continued closes higher. So really this is the first month where, we're back within a prior month. So if we were just to isolate for this range alone, right, and I think that it's a good area we could expect to spend a fair amount of time in over the next couple weeks or next couple days at least, this is what we're looking at. I'm not worried about this unless, let's say that this is, for example, a more clearly defined range is going to incorporate where the bulk of the activity was defined, and that's going to be a little bit more specific than just the, just the weekly levels, right? So if we're looking at a structure, let's say a structure develops over time above these highs up here. We've had this spike, took out the highs. Let's say we go on to develop over time and then we break down. Okay, then I'd probably be a little bit more worried, right? Because then we have something that has the semblance of a distribution structure. This right now is just the first inside month that we've had, right? After a long trend, after a really strong trend, market's going to do what? They're going to take a breather. They're going to consolidate. This happens in markets. It's actually more the norm than the trend is, right? So ranging markets are a more dominant feature of markets than trends are, right? In terms of the two different environments you could be in. So this kind of bracketed environment, this is what's to be expected after this year-long, extremely long, really strong trend off of what was, the depths of hell for most markets back here in March 2020. So I'm not really worried. I said a couple YouTubes ago, and this is going back a few times now, I'm not looking for longs up here. I wouldn't get overly aggressive up here. I would be more neutral. And I shared this Heikin-Ashi candle. I shared this on the weekly, and I was talking about how this is a pretty good signal, this with your higher time frame moving averages. So we lost the 50 moving average. We lost the 20 moving average. Those are some pretty important tools for some basic trend following systems. And a lot of times what you'll see is they'll actually be pretty enforced by systematic and algo-driven strategies. So what we're looking at right now, this is actually the 100 moving average. Right, so this is the 100 moving average, but if we look at the 50 moving average and the 20 moving average, the 20, which is your middle Bollinger Band line, so the center line for a Bollinger Band, just in case anyone is maybe unfamiliar why that is pretty important. It's kind of a line in the sand for bulls or bears on the 4-hour, on the daily chart, on the weekly chart. So we're below, on the daily, we're below those moving averages. First time in a while where we've had any kind of real commit below there. So no defense there by any kind of algo. I think that if we zoom out, we see that there's a few other levels on the high time frame that might be really interesting that we've been talking about for a while now. The 20 period moving average on the weekly chart is, I think, one of the most important lines in the sand. Okay, and I've been beating this drum now for years. And again, this is just your center Bollinger Band line if you have Bollinger Bands on. They're all skewed right now because of the March move. But what you're looking at is, I think it's a good way of defining the trend. Bulls in control when you're above on the weekly, bull market. I think it's one of the better ways to define a bull market. There is no objective criteria for a bull market. There is maybe a predominance of things that you look for, or you look for a predominance of things to line up, but there's no objective measure of a bull market. I think this is probably the best thing you could do. Look at the 20 period on the weekly. So we haven't visited that once yet, right? So I think this is good because we could have, and just be prepared for more of a pullback, right? We could still be within what would still be considered a reasonable range to auction within for a long period of time and still continue on in bullish fashion. This 20 period on the weekly, 20 and the 21 EMA, they kind of line up in the same general area, is right around these lows going back in February. So the inside month structure is going back to March. So March 1st, and we're just closing out this monthly in 7 days. So this level is back down around 44, all right? It's the 20 period moving average. We haven't visited it once yet this bull market. And you can see in previous bull markets, even post break of all-time high, we visited it twice. Now, a trend is really strong. When a trend is really strong, you could sort of use a moving average as more or less a barometer for the strength of that trend. How far extended we are. You'll use standard deviation bands from it. Again, Bollinger Bands are one very popular use of that. But we haven't visited it yet. And what that means to me is that is an absolute area where I will bid spot. All right. Why am I that confident? Well, because in a really strong trend, you're going to see that these moving averages, that these trend-based tools, when you're in a trend, are going to be popularly used by anyone who is applying some type of systematic or algo-driven strategy. The first visit back here is going to be enforced by a computer program, right? Think about it like that. You don't have to have buyers waiting for this to come back to the 20 period. There are algos that have been waiting the entire time to bid this first opportunity. So once that threshold is crossed, right, once that area is met, I think that you could chop around there for a couple days. Remember, you're looking at a weekly chart. Don't expect it to develop on a 5-minute time frame. So the weekly structure could the bottom could very well develop around here. And I think that I'm willing to just passively bid that either way. It's such an obvious line in the sand. If we nuke it and we immediately can't close back above it, right, we're seeing that we have a ton of trouble, then I could change my mind about the higher time frame trend. But just keep in mind, like, this trend has been so strong, and we've had, consider this as well. We've had big institutional buyers get involved. Have all of them got in the entirety of their position? Have all of them possibly been waiting for a big dip to buy? So I think that that's something reasonable to think of as well. Elon Musk, his buy was only 10% below where we currently are. Okay, so he's still, very much in profit compared to the amount of capital he has at work. And two, he didn't, when an asset manager gets involved, when a big whale gets involved, like Elon Musk, I hate to just call him a whale. We know he's, he's much greater than that. But when someone like that gets involved, they actually don't care if the market chops around where they are. He's getting involved not for the 5-minute or the 5-month or, the 1-year chart. He's getting involved for the 2-year, for the 3-year, and the 5-year chart. All right. So it's very likely that as price pulls back further, you will see these dips bought. I do think that Bitcoin is in a new paradigm. I don't think that necessarily altcoins, it means the same for them as well. I think they're completely different things. I think ETH and Bitcoin are more or less in their own arena right now. And I think Bitcoin is clearly, we're seeing institutional interest. And when an institution gets involved, and they're getting involved in something long only, a lot of the times they'll have a very passive allocation to it where, hey, we're going to buy every 20% pullback. Hey, we're going to be providing, a bid every time we pull back 10%, right? They're just going to be getting in over time because they know that long-term markets trend up. And they have obviously long-term expectations for BTC if they put on that meaningful of a position, even though it might be a very, very small fraction of their overall portfolio. So I think that this is worth keeping in mind, right? We're coming into a major area of market structure. We look at this on the daily. We look at this on the weekly, right? Yes, we did lose this daily, all right? That there's no rule that says once you change the daily structure, you have to just trend all the way back down. Like, people think like that for some reason in crypto. Those levels become really important from a short-term perspective, like how much volume we're going to see at the level, the kind of flush. But weekly chart is still intact, right? You're just seeing a range develop. I think too many times people think in terms of up one way has to go down the other if it's not continuing to go up, right? Markets will go sideways. Another thing to consider, right? This is something I like to think of time and time again. I think that honestly, this down here was an aberration. You can't say that it was, you can't completely discount it, because that's like, you can't discount black swan events for a reason, right? They could have a catastrophic effect on markets. You can't just say, oh, we're going to whitewash over this. It never happened. But that being said, I think that honestly, this move up, this longer term consolidation we had, was probably going to go on to do something like this. Okay, put in some type of bottom like that and go sideways for a long period of time. And I think honestly, we would have been at the all-time high a lot sooner. I don't think that this was an echo bubble whatsoever. So that being said, this is a really strong move up. I would expect more or less the same kind of behavior, just a longer term range to develop, right? Long term might be a month, right? It might be 2 months, it might be 3 months, it might be 4. But I don't think that this is just going to do an about face and start coming back all the way down. One more thing about the higher time frame. If anyone is like very afraid, right? They're panicking. I've said this all these dips on the way up. Throughout these dips, I've said this. Same thing I'm going to say now. After a big move down like this, I would say console yourself on the basis of statistics, or with the maybe cushion that statistics provide. So if we look at this dump from the high, we're 26% off of the high. Yeah, that's a big move. Standard deviations above the norm. Okay, but we're over 20% into a move. That puts us into, there's only a few days throughout the year we have something like that, right? And you could see that markets are very imbalanced in one direction, and then they have an imbalanced move in the opposite. So let's say that this is the bottom. All right, so the bottom is 26%. Or let's think a little bit further out, maybe prepare for the worst. What happens if we end up having a 40% correction? Okay, the bigger the move down, the bigger the bounce up. Remember though, a bounce takes time to develop. You're talking weekly chart change, weekly chart bounce. It's not weekly chart change, bounce has to occur in the next 10 minutes. People are glued to the screen after, so that's why people panic, because they see a dump and they're thinking, well, where's the mean reversion, guys? Where's the mean reversion? And it's like, it's the first day after the dump happened, right? It's within the first week. So let's say we get the full extent of a 40% pullback, okay? And we could go even further than this. A lot of times you're going to see a market will correct over the 0.5 level. So 0.5 meaning if you're up and down, you're going to cover at least to the halfway point. And then you're going to get the effect that either buyers continue to lift this up, or anyone who bought up here is going to think we're closer to my entry now, I'm going to cover and break even. And then you have this bouncing pattern all the way down of, I entered here, market broke down, fuck, I'm covering. I entered here, market broke down, fuck, I'm covering, by a bunch of different people throughout this timeline. So if you're looking at the structure from the low now, I would say that I am confident enough to, hey, let's say I want to get out of this market completely. Let's say that this is the low. I want to get out of this market completely. I'm going to, right? Part of it is obviously discipline. I'll place asks or an exit, take profit at between this 0.382 and 0.5 fib level for this entire move. I'll place asks up here, and I know with, I would say, 99% certainty, barring no catastrophic change, no major regulatory, we're banning Bitcoin, I know that over the next couple weeks we're coming up here. I could say that with utmost sincerity, that it's probably one of the most confident things I could say without being completely, this is 100% going to happen. Let's say, it gets worse though, right? Because now we're above that 20% threshold drop. We start saying that on-balance probabilities will correct soon, but what happens if we go all the way down to 40? Well, guess what? You're still in a position where if we came all the way down to 40 down here and bounced up to this 5 and 618 level, then you're probably going to still get out at a more favorable price. So there's always, it never benefits you to panic sell the lows. Unless, like I said, you see there's a ban on Bitcoin, right? Something like that. And even then, it's never a good idea to sell after a 30%, after a 25-30% move. Barring any major catastrophic, I can't even kind of come up with a hypothetical type of situation. Even all the way down to the 20, right? Let's say we get that structural retest. Everyone would, shit their pants, but big dump like that, right? What happens? Huge dump like that, markets will put in a move to the opposite direction in the same force. It doesn't need to cover the entire range, but a lot of the times, the bigger the move, the bigger the bounce. So you could still say, all right, if we're all the way down at the 20, let's say that we broke that 40 level and we keep dumping, right? You still have probably a more favorable level to get out. Okay, so I think that this market gives you a lot of opportunities to make smart decisions, right? To not make rash decisions and just kind of puke. And that's why, the market is the way it is, though, because people do puke. Okay, so that's something to keep in mind. I think that sometimes it benefits you to forget that the market moves like this up, forget that the market moves, like this down. Look at the chart as it does if you flipped it vertically. The market just does this over time, right? And hopefully it does this up more than it does this down, right? It has this pattern, though, where it just swings about an average. So if you're going to do some sort of, we'll call it a, there's a proper word for it, linear regression or something like that, there is sort of this line that price follows, but it swings about the axis. Okay. Over time, markets tend to trend up, and that's why bears always lose in the long run compared to just kind of idiotic bulls. So on the higher time frame, just this intro is really just this is more of an intro now because I've been going on. This is a don't panic kind of situation. Here is my approach right now because I just closed out. Yesterday I had honestly one of the best trading days I've had in BTC in a really long time. Best trading day of the year. I know it sounds like, I don't want that to sound like salt, right? Because I was always very close to disaster. When you're scalping as the market's breaking down the way it is, you have to immediately get out of a position if it doesn't work, because the imbalanced state of the market, and it's also thin, means that when you're wrong, you could be wrong really fast before you decide, okay, I'm finally wrong, right? The markets, if I'm shorting the market and my shorting idea is based on, a series of lower highs here, and this lot I'm shorting this breakdown. Well, if the market is up here and I haven't closed out this trade already, then I'm already asking for disaster. So I was getting in and out of positions yesterday extremely rapidly, and maybe yesterday was just a really good day. But I closed out my hedges that I opened that we're talking about going back now over a week ago, right? When I started talking about hedging, and I was a little early because I was talking about it back here, I was talking about it back here, but look, if you look at the market as a whole, it's kind of in the same general area, right? I was early, I paid some fees doing that, but kind of got it pretty close to correct in terms of where the top would be. Now, of course, I did it earlier too. All of these could look like tops, and you got to get out when you're wrong. I think right now, and I made the decision to close these hedges out, here's how I look at it, right? If we zoom out of the structure and we're looking at it on a daily structure standpoint, and you're going to see that these levels are very important, right? Higher time frame traders will make decisions based off of these levels. Again, it's always a matter of, intraday charts, intraday traders are concerned with. Higher time frame charts, every trader is concerned with, right? So we're still within that monthly structure, right? So inside month. So we have March, and now we have April. Okay, so we're still within that. We haven't started changing the monthly trend. We haven't broken any kind of monthly close. We've been successful thus far. So where we sit right now, clearly it's roughly it's a range, as I said before, yesterday or 2 days ago in the stream, two ranges within a larger range. So this is now below the midpoint, closer to the low though. In a bull market, I anticipate lows to get front ran. So the way I see it, let's say, why don't you open up, if you think that price can drop more, why don't you open up a short again? Well, I think that it can drop more, honestly. I think it can drop more, but I think that this drop could potentially, so here over here, you have a structure that's being fought over. You have derivatives. We're buying the dip over here. I shared that on Twitter. When this breaks down, I'm not thinking of it ripping up in our face right away. There's a lot of people that are kind of fighting over this, still people longing. This is the kind of thing that's going to puke. This is an extended trending move from a range, right? At any point, you could be creating the next range before you rip back up. The way I see it, right, I had a really favorable hedge on, multiple shorts on here. Maybe we do wick down to 45 or 44, but I think that it's kind of one of those things where even if I put a take profit on, right, let's say it gets front ran slightly. Let's say that I put a take profit on for a market order. This could be so volatile down here, right? Or even if, let's say it comes back up to my stop before then, that the rip up from any kind of major imbalance on a final capitulatory move, that could cost me a lot of money, right? So this little bit, this marginal difference that I might be able to capture down here, honestly isn't worth it. I'd rather actually just be in what I am and let things develop over here, and then see structure is beginning to form, and then maybe begin to add to spot positions and all that. But I don't think that it's worth kind of chasing the shorts at this level. Okay. If anything, it's kind of from a market structure standpoint. If we look at BTC, and I'll get down to lower time frames in a second, you know, this 50 and 52 level, right? We said that this was the level that we wanted to maintain. You know, we said we didn't want to, if we were looking for a structure to form a base over here, it would be a 3-drive structure. It would be something that would break below this low, reclaim. You would see that begin to form there. A break below this level typically means that, yeah, you're probably going to cover the previous range the same way you did prior, right? You're starting to see, though, that there's a decent response here. So I think, again, it's a little risky to play the move in a very binary way of, hey, you fell between here, now you got to come all the way back down here. What I will say on top of that is you're actually very close to this inciting a lot of bullish energy in the market. So if you go off of this daily, if you go off this daily low, go off this daily close, any kind of major level that most people are going to be agreeing on, it could be a high participation zone, right? It's a level that not just scalpers are going to be agreeing on, but swing traders, position traders, and the likes of all higher time frame traders, okay? If you see something like this and you're above 51, well, we're back within a prior range. Let's say you close the daily up here. Now you got everyone looking at a ridiculous wick into this level. Bull market back on, ES is back on. You know, you can see how the market is so reflexive. When I kind of speak like that, I'm talking like the market is, right? I'm trying to convey the idea of everyone saying at once how we kind of act in a very groupthink manner sometimes of, oh, it's good again. It's bullish, obviously. We all agree. Okay, all hit the buy button. Well, that's what makes things move. Coinbase seller over here, he wanted to get out for some reason really bad. If we're back above this daily level, I think you're very likely to clean these highs up. That's another reason I was saying, like, if you're stuck in an underwater position, unlikely that you leave these highs uninterrupted. And going back a couple weeks ago, or this was a week ago, excuse me, as this was developing, one thing I was talking about was, don't be surprised if you get the puke through this level, bases out here, makes everyone think it's about to puke lower, but then this is something like this. And that's one of the most bullish structures you could see, right? When you have this level is so fought over that finally when buyers and sellers figure it out and sellers are in control, you fought your ass over, you fought, you know, tooth and nail over this level. For the market to rip up now and be above this level, well, it kind of puts all of this defense to shame clearly, right? Now things have clearly switched. So I don't know if you get that. You know, you might wick up here and nuke back down, but the odds are that you're going to take out these highs, right? More often than not, you won't see very often in this market that you'll leave behind a structure like that. So I think that's another thing. These things should really add up to hopefully make you not make rash decisions. Again, it's just, this is not financial advice. This is just built on the back of what has been historically the case for BTC. I don't think it's changing overnight in that regard. So those are some higher time frame points that I think were important to go over. On the lower time frame, you know, we have, if we look at where BTC is, all right, look at the profile that's developing. So we had a previous composite that we gained acceptance outside of, so that was a 4-day composite. So that's your composite right here. Here's your first day of acceptance out, which I said right away, I said that this was a signal for my short system, right? You have acceptance outside of here. You have volume confirming outside this level, clearly out of balance for what was the last 4 days balance. And after a range, you know, it's showing that it's going to resolve in one direction. So we have a trending day down, and now we have the way that you would want to see a bottom develop is the first day is this B profile. So two things about this profile. You have a poor high. So we do have a poor high. So when you change QT, it changes the amount of ticks. So you do have a poor high. You have a good low, but it's actually not the best kind of low you would expect on a capitulatory bottom, right? If the market's going to break structure like this and we're looking for a big bottom, you're expecting something that has a tail. So my point is, like, this could get left behind, but I'm not looking at this and saying it's good to get left behind. You know, if we put in a day, let's say that we have a day like this, And now we have another balance day that develops. All right, you normally have, after a big splash like this, another balance day that develops within this area. I said this, I said this after this first day down. After this first day down, what did I mean, I'm sure I said this on either the stream or the Blockroot stream, private stream, that you're going to get 3-4 days after imbalance after that, right? So this day, let's say you get something imbalance within here. Buyers are more or less in agreement with sellers. It's kind of a stalemate. It's also kind of everyone's waiting for the next shoe to drop for someone to make a decision, right? No one makes a decision. Everyone waits. Everyone else is like waiting for something else to happen outside of their control. Let's say we get a day that ends up breaking down, and then we wick and we have a tail. Then I'd be more confident, right? If we have a tail below here where it shows you a buying tail, right? A big rejection. That's what you're looking at profile anyway. You're looking at where the market's accepted and where it's rejected. This is accepted. This is rejected. But after a move down like we've had, I would expect more of a rejection. You want to see sort of buyers really impose themselves. You want to see them really kind of impart their will on the market, or impose their will. I think it's impose their will. So we don't necessarily have that yet. Another thing, this is a pretty efficient move. So this is, you have your initial balance. It's one-sided. It's a one time frame market, or a one timing market. Excuse me. My fucking mouth is dry. Give me 1 second. Wrong pipe. This is one time framing down. Okay. Now forming balance. But yesterday during the move, this is a very strong move. It was a very good, strong trending move. There's no inefficiencies in it. So it's not like we have a really close gap to say, hey, we gain acceptance, but sort of back like this. If we had this, when we have a gap like this, we had this over here. It looked like acceptance. I took a long ended up failing shortly after. Actually closed it out in profit, but it didn't end up working out. The point is, I got out of the trade. A gap like this, if you gain acceptance into it, you probably cover it pretty quickly. The structure that we built on the way down, you can see it's a trending move all throughout. Little tiny gap there, but not really, right? Nothing that really shows up as single prints. So that is a pretty efficient trending move. It was pretty, it was forceful. This wasn't the same as this. This wasn't an imbalance like market tips over on open interest, liquidates a bunch of leverage. This was a spot seller, okay, which is another reason why I'm cautious. Spot determines the market, right? Spot controls the market. Spot is real price discovery. Leverage is what swings the market on the low time frames, right? Leverage is where your imbalances are for the low time frames, but spot is, you don't mess around with spot. Like when spot wants out, well, you're not going to fade that. That is the market, right? The whole premise and long thesis is that supply is being picked up, not dropped off. Let me just go over the in terms of the low time frames, I would just expect we're probably going to revisit these lows again. I would be really confident in the short term if we start trading above yesterday's close. It doesn't open up a whole lot though, but I think if you start trading above yesterday's close and you don't see that you're immediately rejected at these lows, you're probably looking at a trade that's above yesterday's close up to these highs, right? And I'm talking about something that might wick up to these highs and offer you an opportunity to cover this, because that's not a gap, but there's not much that was really established in that area in terms of price action. Another thing to consider on a positive note, from the breakdown, so from this break, so hey, this is a puke moment. Where's everyone tagging on after that? I'm pretty sure we're trading above where most of the risk was put on. So there's your, so there's your anchored VWAP post break. So now we're trading above. It's kind of right around. So buyers are on the low time frames in control after this break, but you can see that because we're kind of changing the structure on the low time frames as well. The worst case scenario would be, we're still trading below where that risk was put on, sellers in control. But the higher you trade above this, right, the more likely you are to have a little bit more of a follow through and a squeeze, because there are people that, believe it or not, just sell the lows and they short and they hedge, and they're using leverage, and they get squeezed, and that's why the market moves in both directions. Let me just go to the chat really quick. In terms of like funding right now, just to give you some color on what we're seeing, there is no, funding is neutral to negative. Front month contracts are negative in terms of linear futures. So some of them are trading negative. Funding is neutral, as flat as it can be without going negative. We'll go to, just give me 1 sec. I'll point this out really quickly before I start going off on a tangent. So I know that that email always gets doxxed, but that's my email with Genesis. They made me an email on their account. In terms of sentiment, in the short term, you could see that short-term skew, so this right here being in the negative, it's just an indication. I've gone over this many times. This is Genesis Volatility. Go to their YouTube if you want. Phenomenal YouTube. It's just showing you that the market is really buying insurance for the downside, right? So there's a ton of negativity in the market. It's kind of the first time in a long time I've seen a shared sort of ubiquitous negativity in the market. So we're seeing an option skew. Downside is really being priced in, let's see, or the expectation. If we go to Bitcoin futures, you can see that the front months are trading negative. So we're looking at OKX perpetuals negative premium, Binance perpetuals negative premium, perpetual on FTX negative premium, and the term structure is starting to really get flat. So if we look at annualized premiums, and we just look at some of the more important exchanges, because none of these really stack up, half of them, you get the picture, right? There's not the expectations have dampened a little bit, and you have these kinks in the front months, as opposed to the latter months haven't changed honestly that much. But thanks, Kilgore. Appreciate that, man. So the kind of negativity you would want to see at a bottom. So if you have all this, honestly, and we start trending up from here and we start breaking back above this low, you know, that's why I took off my shorts. I'm not buying spot here because additional spot now, for me to add additional spot, I mean, trust me, I made a lot of spot yesterday trading futures, but for me to add spot, to deploy dry powder, I would want to see it develop. I think that overall, like I said, the reason I took them, you know, I took the shorts off for a reason. I think we see relief over the coming week or two. I think that, again, I've said this going on 2 streams now. I think we just develop a range, you know, and what will happen is you'll get the next move up. Everyone will get super bullish, and then maybe we'll do that 2 or 3 times, right? And the difference will be, let's say we have, let's say the best case scenario, obviously we've sort of, you should know by now, is let's say we come all the way down to the low, come all the way up to the high. I mean, if you start to see something that looks like this, then maybe we should be a little bit worried. If you start to see what has been the case for previous moves without this entire structure, something like this, right, that favors the grind up, then you know where this is going. Like, if we're 2 months from now and we've done this, and you are suddenly in the last couple weeks just favoring the midpoint of this, like, if you don't know where that's going, then no one can help you. But if we start favoring the lows, don't start thinking that, you know, it's all a trick to suppress prices and get lower prices. Like, wait at that point. If you start doing something like this, you reject again, and now you're down here and you're just kind of, you know, that limp price action at the low, then I would say I would be very worried at that point. But even then, it's difficult because you had that over here. But the point is, it never came back down to that original low, right? So this low, as I've said, this entire trend, you know, it never came back down to the initial major low. Whereas if we go back down, you know, the first low here, and then you have a lower low, and then everything is kind of, at this point, you're not full. I mean, this was, I want to say it was an obvious short to everybody, but I think it was. You definitely don't want to see this drift where you're showing no upward activity. I don't think that that's going to be the case, though. Oh my God, I didn't change the fucking chart. So really quick, in a very sped up version, if you're doing something, oh my God, I suck at this fucking live streaming thing. If we do, it's not frozen, buddy. If we do something like this and we start favoring the lows, okay? I know you guys are going to catch up in a second. I'm going to, you know, this just goes to show you how much I talk, because I'm not going to cover it in twice the speed. If we do something like this and start favoring the lows, the initial low, then I would be worried. If you do something like this, put in a high, move sideways, and then you start to see that you're favoring above the midpoint of this structure, you know, returning back up to the highs faster, then, bro, we could just see the horse screen, bro. As if caps are going to make me notice more. I'm not even looking at the chat right now. Then I'd be worried. And I use this as reference. This was a grind towards the low, but we were never at that low. This back here, you broke that major low, and you've been at these lows and kept drifting lower, right? Very clear that kind of all the air came out of this. All the air came out of this. And then going back to, you know, you go back to 2018, same thing. Might need to hire a producer. No, I just need to hire someone to like fucking watch the other side of the screen so that they could see that my OBS is, you know, I gotta tell you, like, to be completely honest, every stream I have a panic moment where after I've gone on a tangent for a really long time, I look to the right in horror and wonder if I haven't changed the screen. Or for anyone who's been doing it for a long time, I wonder sometimes, because I've done this, if I haven't turned the volume on. So I think this should be clear though, right? I am anticipating a range to develop. What side of the range we favor, I think it would be pretty telling. So now let's go back to the chat, and I'm just going to look at one side of the screen so I could see. Go back to some of the questions. Okay. Pure sound now. Nice. When did you start trading? I started trading when I was, so I don't want to sound like one of those tools that is like, I started trading. Because I don't know who did this. Like, I had a brokerage account when I was a kid through my parents, but that wasn't when I started trading. You know, that was not called trading. I had stocks when I was a kid, all that. I had a brokerage account from the time on my own from I was 18 when I could. But when I started getting really into markets the end of high school. Actually, no. I started getting into markets the end of middle school. My parents bought me the book. It was, the first book they bought me was it wasn't on markets, actually. This was Jack Welch's book, the CEO of GM. I'm trying to think of what book it was. It was a great book, but a little touching on markets. But I started reading The Intelligent Investor and by Benjamin Graham, and what's another one? Random Walk Down Wall Street. So clearly at odds with that now, but got really interested in markets. Obviously went to school, studied finance and economics, spent a little bit of time studying biochemistry, short-lived. That was during Hurricane Katrina. I thought I wanted to be a doctor all of a sudden because I saw that there was need for doctors. I don't know what I was thinking. I changed obviously back. But started trading personally on my own in a really interesting way, or rather really interested manner. I would say when I was around 21, where I really started trying to grow on my own, which was kind of stupid. So, yeah. When did I get really good though, which is what most people ask me? I think that it's constant development. But yeah, when I started trading, I'd say mid 20s. I always have to clarify because I think some people will try to like, I've been doing this forever, and it's like, no way. I'd piss money away for years whenever I've signed up for my first brokerage account. So VPN. So VP, I don't recommend for it. So let me just make something clear. I'm not telling anyone to do anything that they don't want to do. People use VPNs in crypto. It's not illegal to use VPNs. It's not illegal to go on the exchanges. It's trouble for exchanges, not for you. Again, talk to whoever you need to talk to whose area of competence this is. But as far as exchanges KYCing, I would expect them to. But exchanges are going to KYC in the same way that FTX and Binance does. So anti-money laundering, what they're trying to make sure, why they KYC and limit your withdrawals is because they don't want you to be able to go onto the exchange and like siphon millions of dollars through. So that's why they put withdrawal limitations on it. I don't see them doing full KYC in the near future. So with exchanges across the board. Only exchanges that are really doing that are the ones that are just trying to cater to institutional clients. or they might have institutional clients that are mostly their client base, and their institutional clients are they're only going to maintain their interest if they have that protection over them. So let's see. No, options don't. Mike Donlan, I share the stuff on options like for fun, but I always follow up and say this doesn't actually move the market. It's something I always keep an eye on. The large expiries, only if it's in combination with futures as well, right? With the futures data we're seeing also. Options on our own, a billion-dollar options expiry even is not going to have an effect on a really meaningful effect on the underlying when the underlying is over $1 trillion. It's kind of a thing that's laughed at by real options traders. So I'm in an options Telegram that is a private Telegram with just like a handful of people. There's like 20 people, and they're options market makers, and it's through Genesis. And these are the guys that are options market makers on, Deribit, main platforms. Traditional guys come from incredible, they have incredible pedigrees, and it's kind of a thing that's laughed about. So it's just a thing to talk about, a talking point, but it's not going to have an effect on the market. Future quarterlies have an effect on the market. Where the volume and open interest is, adds up across exchanges. That's what's important. The options notionals, most of that is nothing anyway, right? It's not going to expire in the money. There's a massive gap between 41 and 45. Okay, one sec. I'm getting through the part where you guys couldn't see the chart. Radio TA, yeah. Hey guys, some of the YouTubers that are on YouTube that are also on Twitter, they just talk. They just keep a chart up in the background. They just talk, and they don't know what they're talking about. So, okay. So 2, 3 main conditions to add to spot back. That's a good question. I'll answer that. One sec. I just want to see if there are any that I could kind of group in together and remember. I don't think I would say, because I was trading equities before, so I had a traditional background. So a little different though. I wasn't trading right out of the gate, short term. And I think that as you go down the time frames, that's something you really can only refine over time by trading a lot. So have I ever had down years since getting it? No, I haven't had down years. Have I had down months? Absolutely, but I've never had a down year. The only down years I had were before getting it. Does that make sense? But since getting it, no. I know you've traded. No hyper specific markets, nothing exotic. All right, so I'm going to answer the question about spot. I know the Deribit thing's a fucking pain in the ass because I really would love, access to options, because it's just the reason the market would be better as a whole if it. Who knows though, right? Maybe some of the features about the market, the way the market is currently, are good because there is no options market, because there's this volatility. But there would be, I would say, less of a worry for people that are trying to gain access to leverage, because with options, you don't have to worry about liquidation, right? You pay your premium beforehand. And a situation like this right now, when calls are really cheap and puts are really expensive, I would love to sell some puts and buy some calls. But so bad at finding levels. Okay, one sec. Yeah, Mike, I think it's probably a lot of it's, I think a good amount of it's random coincidence, and just once people start to expect something, they start acting on behalf of it. Let's see. Okay, so I'm going to go to the chart. So in terms of in terms of how I want to add to spot BTC. Now, I always like to just preface things by saying I have these rules for myself, but at any moment things could change very fast, and I could see maybe more evidence of one thing and less of the other, and I might just make a decision then. But in terms of seeing a bottom, there's a few things that I want to see. One, you actually want to see this kind of across the board negativity, right? I've always said this, right? It's very simple when you think about it. When everyone is confident, when the market is showing a ton of leverage in the system, open interest is much higher than prices moving up, futures premium is consistent, It's not a one-off thing, right? Too often it's like, oh, futures premium is very high, must be a sell. No, that's why the market is so difficult. You see this over time and then it adds up. You don't know when that's going to tip. Hopefully you can figure out a way to try to determine that and put yourself in the best position. But when the market is very long, when everyone's very positive, the market is only full of one type of person, and it's a future seller. So what you want right now is the market to be as negative as possible so that the market is full of future buyers, right? Whether they're covering shorts or whether they're buying because they're on the sidelines now. So the market as a whole is very negative, starting to get there. You need to see that persist, but that's Twitter, right? That's mainstream media, not enough to go off of. I want to see things like we're seeing in the future in the options market. Now, it might not be meaningfully enough from an OI standpoint, but it is meaningful enough in a sample that it probably represents the greater sample, right? If you took, I am showing the chart. If you took like a cup of seawater, and let's say that you were measuring the chlorine in a pool, right? If you took a gallon of that water out of that pool and you measured the chlorine content of that, you'd probably say that, you could extrapolate from that what the chlorine content of the pool is, right? Parts per million or something like that. So if I'm looking at the options market as not something meaningful from an OI standpoint, but something meaningful in the sense that it's representing sentiment and you could extrapolate from that, it's one thing. So when you're seeing consistent 20 delta or 25, no, it's 20, 30, 25 delta skew showing that puts are in demand, that's people anticipating downside, right? They're buying protection. When you're seeing that, for example, across the board, we're looking at funding right now, which is on average, it's going negative. So that's the cost of this leverage right now. So it's very expensive in a bull market to hold a leverage position because it's normally trading at a premium. Everyone wants access to upside capture. So when I see that over time, after a big sell-off, that it's maintained either neutral to negative level, or if it's increasingly negative and price doesn't continue to move down, that's a very strong signal. I want to see, right, capitulation, so high volume, absorption, right, and these details within the futures market about what's it called? About leverage, right? So that has to occur though in an area where I could define a position. So the point is, I still want to see that price is trading above a line in the sand that I have. I don't want to see that those things are showing up and we're still within a gap. Like, it could develop from there, but I won't get in the position until we've retaken a level within market structure. So for me, let's say price did come, let's say we bounce up a little bit and then we come all the way down here. If we nuke this low, right, or let's say it stays up here. I don't want to draw anything too ugly. We're up here. Funding is staying negative. We're moving sideways. Funding is negative. Options is negative. We see 25 delta skew the way it is. Market is getting increasingly negative. If we start to move up while that data is showing a certain negative positioning in the market, then what I'm thinking over here is that this is absorbing all of that behavior, right? Absorbing what is the cause of all that market data, right? So futures go, they trade at a discount and funding goes negative when the futures market is trading below the spot market, right? When the spot market is trading at a premium. Okay, so this is something to keep in mind, right? That's an indication of positioning. Right, so I want to see major higher time frame signs and positioning before I add to spot. And I think I always like to see as a priority that market structure is maintained or reclaimed. Other things you could look at is, like, let's say price develops over time. You could look at a CVD, right? I use CVD over higher time frames as well. This could be on your hourly, 30 minutes up to 4-hour charts. It could develop on the daily, but we're not at a level yet where I would look for it on the daily. So if I was looking at a CVD right now, and it's just showing, the cumulative volume delta, so there's running total of buys and sells, market orders. If I'm going to use BitMEX and Bybit, where a lot of that weight is thrown around, take the spot off. I want to see futures get offside. So we have funding that is going negative, right? So it's a good sign. If you zoom out, it's kind of going flat. So that's a good sign. Into the pullback, if we could stay flat, and let's say that we range, right? So let's say that we begin to range and we do something like this within the range, okay? So now let's say we have something that might be a range developing. We're back below, rather above yesterday's close. Haven't really done anything tremendous, but you have another low in the structure. So let's say market ranges and then stabs low again, makes an effort towards this low. If we see CVD trying to continue to trend south, then I think that, that's another case to be made for absorption. In terms of spot, all my decision making is based on higher time frame signs, right? So funding, sentiment, which is through funding and positioning, and market structure. So back some questions. Best indicator for identify locked range. I don't know what that means. X factor. Mainly trade options in traditional markets and adjust them. Yeah, so if I was trading equity still, and I wasn't trading equity derivatives in the sense that of trading equity index futures, if I was trading an individual name, I'd be trading options outright rather than buying stock. So yes, I've done a fair share of equity options trading. I don't get too much into it. I'm not I would never call myself an options trader, but I think bots are, there is potential for them to be profitable. I think if they're being sold, that they're probably not going to have much of a lifespan. Not because you can't make something and sell. Why would you have something profitable and sell it? But because over time, that'll be washed away, that edge. And it depends on conditions, right? If you have a trending bot applied in a range-bound environment, then you're obviously using the wrong tools, right, for the wrong conditions. I think they can be profitable, though. But I think a lot of them might be negative skewed. So I had a friend who was using a bot, and it was really profitable, and then the time that it's not profitable, it wipes out all the gains. So negative skew is, when you have you might have a series of small wins and then a massive loss. So purchase FTT. So why I purchased it? So FTT, let's go to the chart. I purchased it because it's a winner over the last couple months. And I think that if we just look at performance over the last quarter, I think you could extrapolate from that. New market condition, not 2017 anymore, ICO bullshit. You have all these IDOs and things that can run, but you want to see what has had strength for a long time. So the last quarter has been all about centralized exchanges. And with the Coinbase listing, is going to reprice exchange tokens as we know them. Just to touch on the Coinbase stock, I think it's the same thing as Spotify. I remember when Spotify went public and I was participating, a lot of short-term volatility. Market moved up for I think like a month and then nuked. Facebook, the opposite. So let's just see how good my memory is. Spotify moved up and then nuked. Facebook moved down and then clearly is where it's at today. So if we go all the way back to Spotify, yeah. Spotify is like your initial listing, SRM and Sol, right? Listing, up, nuke, long-term accumulation, and then now it's at higher prices. Facebook moved down, right? Was a flop. Why the hell would why is Facebook going public? Blah, blah, blah. And then, so Facebook, very similar to Coin. Why would this thing go public? This is stupid. No one uses Facebook. Facebook is absolutely ridiculous, and I think the same thing happens with Coin. So look at the user base on Coinbase. It speaks for itself. Crypto is out of the box, guys. Certain cryptos are not going to make it. Sorry. A lot of the shit coins, they're not going to make it. But Bitcoin and some majors are going to be in a league of their own. And Bitcoin and I think ETH already are. So Coinbase is going to play like I think a less volatile Bitcoin. So I think let's say that, Coinbase, quote me, right? Let's say Coinbase starts doing something like this, bottoms over time and then starts reversing. I think you're immediately going to see a response. You're not going to immediately see it because the market's not that efficient, but I think you'll see Binance Coin and FTT go on even more of a run, right? So FTT, why I got in it, I think it came to a good level for me. I didn't get the low, but I I didn't get the low, but we're at support at an area where I think is a good area to buy for a long-term addition. No trade, just a spot addition. Just going to be averaging in. So, yeah, so negative skewed strategy is a bad strategy. Trend following can be a positive skewed strategy, you know, where you have a bunch of small losses, but your larger wins make up for your losses, right? You never want a negatively skewed strategy. A negatively skewed strategy might be like selling options premium. You know, income options premium, you sell options against the S&P. You know, you sell calls. It's never going to go up this much in this short amount of time. And then boom, the one time it does, you're broke. Selling naked options, rather. There's no real advance BAW for buying YFI versus YFI USDT. You want to buy, if you're, so just put it this way. If you want to get Wi-Fi, get in with the most liquid pair. So which is more liquid, Wi-Fi BTC pair or Wi-Fi USDT pair? I think things lately are USDT pair. So the website that I use that shows sectors is Misari. Just going through the chat, and this shows sectors. It shows it has a ton of stuff, guys. Honestly, it's a phenomenal tool. This is like a Bloomberg. I had a Bloomberg, and this is as close as we have it in crypto. I mean, I'm not gonna get too much into it because I know how I will be. I'll just get into a rabbit hole and forget what I was talking about before. But it's a great platform. Analytics, Intel, you name it, all in one. It's like a Swiss Army knife. So in terms of the decoupling, I think it's short-lived. I think the market is still very much tethered to BTC's actions. I'll tell you what, ETH is higher beta. Okay, so what that means is it'll have more downside capture than BTC on the moves down for the market, but it'll have more upside capture. ETH is going to outperform BTC. Okay, so if you could stomach the volatility, and I could say, if I could tell you with certainty that both of them are going to be up in the future, in all of those futures, okay, if they're both going to be up, barring no change to anything, right, major, if they're still just kind of on the secular trend, ETH is going to be going up more. ETH has a deflationary thing going into effect in the very near future too. So I don't think that's priced in, honestly. I don't think you could price in. You could price in anticipation to an extent. I don't think you could price in the effect of decreasing the supply of something. So when did I get out of spot? I didn't get out of spot. So a couple times throughout this trend, pretty public, I sold spot. I sold spot over here. I sold spot over here. And all I said was like, guys, like I said it publicly on my Twitter. All you have to do is on Twitter search, type @Cantor and Clark, and then I think you just type sold spot. So I got out because why would I not sell? Like I would kick myself years from now if I didn't sell at these levels. Sell something, right? With this more recently, and a lot of the times throughout this move, when things got really overheated, I've hedged, okay? So when I hedge, I have a lot of spot on multi-sig. Can't access it quickly. Can't take it off fast. It's not in a hot wallet. It's multi-sig. I have to drive to multiple locations to get this wallet to move any BTC. Right? There's 5 things that I need to connect. So, and this is through Casa. This is if you have a meaningful amount of BTC that you don't want to have it in a hardware wallet just in your house, right? It's a bearer instrument. I have guns at my house, but who knows, right? So, you don't want to be putting yourself in that situation where someone's going to rob you, right? So I hedge. So what I do is I sell sometime my full amount of my portfolio, but more often than not. I'll sell a portion. I'll try to dampen the downside by selling against my portfolio. So I'll open up a futures position, sell that against my total asset value, right? And try to just dampen the volatility. And at that point, I'm locking in my portfolio's USD value, right? Let's say that you have a portfolio that's $100,000. You have $100,000 in BTC, and let's say you have it in a Ledger wallet, okay? So on the way up, things are good. and you have $10,000 in BTC on a, actually, I don't want to do it high leverage, right? You have, let's say you have a $100,000 portfolio, and on exchange, you have a $20,000 in hot wallet, right? So 20,000 BTC on the exchange. You have 100,000 in a hardware wallet. Your total portfolio value is 120,000. You're not certain. You want to lock in the USD you got. You're like, whoa, I made $120,000. Like, that's a lot of money. I don't want this to go down from here. I want to get this out. What you can do is sell 120,000 contracts of futures, right? So you sell that, and you're in a synthetic position now. You're flat. You're delta neutral, right? You'd have to rebalance this and do a lot. It's not that simple over time, but it's simple enough at those levels, right? And just in kind of a static environment. So you sell those futures against that position. You're flat now, right? If the market goes down, your futures position for 120,000 contracts is in profit. If the market goes up, your spot market's going to go up that much, right? Your spot amount's going to go up. So you sell against your spot. That's all I've done. I've hedged, and it's a short position, but it's not outright in excess of my total portfolio value, right? Hopefully that you understand that. If you don't understand that, there's a lot of resources you could look up on getting into a synthetic, like getting into a flat position with futures contracts. But that last short that I opened wasn't at 60. I want to say it was, I tagged on a portion of it. I want to say it might have been at 60. It might have been 60, 61. But I added more at 59. I averaged down into that position because I was sizing up into it, because I thought, all right, I'm still in a good area. I had limits higher up in case the market spiked up. I was just very confident this go around. This is kind of silly because I don't often zoom too far out and look at trend tools that much lately. But if you're going to be making decisions based on the higher time frame, I think it's important to look at these because they don't tell lies, right? They're very, it takes the subjectivity out and shows you where you sit. The hike in Ashy, when I looked at this and I saw this developing on the weekly, it's not closed out yet, but I was like, oh, we haven't even had one that's painted like that. This is looking ugly up to this point. We're losing momentum. So I was confident enough going into last week to say I'm market sold a very large position, and I placed limits above. And I was like, this is what I'm doing. I got off that account, I logged out, and I transferred a good amount of BTC to another exchange, put that in USDT, and I was telling myself, I'm going to leave that hedge on. I'm not going onto that account because I don't want to micromanage it. I'll leave that on, and I know that in a week's time, 2 weeks' time, it's going to be in profit. And we were still up here at that point. I didn't know this breakdown was going to occur right away, right? But I knew it was coming. Like, I just was very confident, and I told myself, I'm only going to intraday trade now. I'm locking this in because otherwise I'll be on. So let's say, and this is why you need sub accounts. You'll be on the exchange where you hedge, and then you'll look at a 5-minute. You'll be looking at the weekly, thinking, "Oh, this shit looks like it's going to roll over." You'll put on your hedge. You'll leave your chart on. You'll go under the 5-minute chart, and you'll think, "Oh fuck, this looks strong," and then you'll close your hedge out, right? So I wanted to make sure I did not have any of that. I didn't want to meddle with it whatsoever. Do you have a list of books somewhere? Yeah, I definitely can give you a list of books. Send me a DM on Twitter. I'll send you a list. I have a really extensive list that I've already made for people who ask these questions. So, any thoughts on Maker Compound? No real thoughts. Compound I saw today was on the leaderboard on a list I had moving up. So there's always this. So this actually, I traded this last week. I was trading this actively, thinking I was going to get the breakout. I'm happy I didn't leave it on, but I think this is in the process of this. I think you're going to see that this sign of strength is not arbitrary and it's not random. It's shaking off all these dips. So comp looks great. I think you see Sol, though, same thing. What I would be careful about, guys, though, is that if you're in an ugly area with Bitcoin, let's say you're in the middle of a gap and you're kind of hanging above it and you're not seeing any kind of response by buyers, I'd be careful, extending this kind of warm welcome to the strong pairs for too long. where you say like, well, Sol is the leader, I'm going to go all in on Sol because when Bitcoin dumps, Sol holds up. No. What really happens is in any statistical sample, you're going to have the outlier and you're going to have the anomaly. It always shuffles. Every bull market, it's always one random coin that has been strong and holds up and particularly well during one dump. But then it goes on to feel sort of the wrath of BTC at some point. I don't think that anything has shown that it is impervious to BTC, besides maybe Binance coin over time has just performed like a stock. If you look at BNB, why does I didn't save them? What's going on? Sometimes I put a ticker on and it just disappears. If you look at BNB over time, I mean, this looks like, kind of looks like, I don't know, a airline stock, or it doesn't look like a crypto. It looks like an equity over like a 10-year range. Even though this is going back only a couple years, but it's always had this kind of strength that hasn't been shared by the rest of the market. How were you confident the hedge would make money? I wasn't confident it would make money. I was confident it would save money. So a hedge isn't making money ever. So if you're not exposed with some kind of outright delta, you're not making money. You're saving money. So I knew that by putting the hedge on, I wouldn't lose any money. I was collateralized perfectly. If the market moved up, it wasn't going to be going against my hedge and liquidating it. My USD value was locked in. And I was looking at the trend thinking it's finally showing a ton of weakness across all systems, trend following systems, momentum systems, price action systems. It was shared more than any other time. Link. Then I'm going to wrap it up, guys. This has been going for a while. I just want to cover BTC. There's no real reason to go too much into alts. You know, I know half of you are going to share an alt that I'm going to look at. It's dumped today. And what you want to do, and maybe so I can just leave you with things that are useful rather than just kind of look at your individual pair that I know sucks to be underwater in, but I don't mean that like in a dickish way whatsoever. I know, everyone has like skin in the game right now and things took a hit. Everyone did, right? Link right now, took a hit. Look at this. Like, alts don't really hold up well when Bitcoin shits the bed, unfortunately. But the thing about alts is, like, I'm going to say this, but I'm also going to tell you, panic selling after these moves is never really something that you want to do, because alts dump 30%, they recover 50, right? You know how it works. Like, how many times has it been this way where just alts will dump? It looks like the end of the world is taking place, and then they rip up a week later. So if you have long-term positions on things, guys, you hopefully have a thesis that is outside of the 5-minute chart. What I would do after these dumps, as I've been saying now for months, create a chart like this. All I've done, comp is on fire, and cake is also. Oh yeah, cake back up. What I would do is this: create sort of cross-sectional. You could use this type of chart for cross-sectional momentum, but really what you're going to do is you're going to see what is showing relative strength, right? What is showing strength? What is underperforming? What is overperforming? So what we do is we'll get rid of these really quickly. Let me go back to the other one. Template, quarter 2. No, that still has low time frame for alt, standard deviation bands. Go to BTC. So now the dump into the lows is, let's find the low. Nice bounce. Get in these streams, and see, I'm content right now. I'm happy to do a stream right now, even though it's a good time to trade. Yesterday was a killer day for me trading. Could have been horrible. It's been horrible for me, guys, like it's been for everybody else before. So you're going to have that lucky day. So that's your low. So out of that low, Bitcoin is up. Let's see. Off of the lows, Bitcoin is up 5%. Pretty good. Pretty good out of the lows. But the rest of the market, in terms of what have been the main horses in the race, out of that low, Now, where is that low? Here it is. Right there. So where's BTC? I'm going to make sure that it just matches up. BTC. Where are you, BTC? Oh, I changed the chart. That's why. So BTC, 1 sec. 5%, yeah, so it's matching up. So out of the low, holy shit, comp is up 37%. You know, Zill is up 16. Cake is up 14. Link is up 10. So there has been a consistent story for this entire market. The pairs that consistently bounce out the fastest have been the same. And I've actually just whittled this down from a much larger cross-section chart before. So this is actually just showing what's strength now. So now you're seeing the low end of strength here, the high end of strength. But your blue chips, your DeFi blue chips, have always bounced tremendously. So comp is up exceptionally. And I think, yeah, Cake is clearly, there's a lot of attention on Cake. There's a lot of users compared to ETH. The fees are very, very low. So I don't get too much into fundamentals, though, because I really don't have any kind of dog in that race. Horse in that race, I would probably say. But I don't have any reason to talk about them because you'll lose me in the first, beyond surface level understanding. I'm not a tech guy, so that's going to cover it, though, guys. I am done for the day. Thank you guys for all stopping in. I think it's been a good stream. Wouldn't panic here. So far, I mean, just to look on the low time frames again to see how things are shaping up. Back above yesterday's low, so that's good. Back within a prior day's range. Maybe see if we could close out between yesterday's close. Looking good right now. Nice bounce off the low, but it's not enough for me to say this is a bottom. Bottoms take time to develop. All right, guys, that'll be it. Hopefully you all have enjoyed this. You guys have a fantastic weekend. Again, if you're not subscribed, go ahead and hit the subscribe button. Visit our friends at Genesis Volatility. I'm trying to push their platform. They have a phenomenal platform, and for all of you who want to learn options, just go to their YouTube. It's free. I'm not sending you to something to tell you to pay money. I'm just telling you to subscribe to their YouTube. And if you want to get access to Phemex, use Phemex.trade. They have a great selection there, honestly, because they have the fastest matching engine, and they have a spot market too, and they have the yield. So, you know, they don't have the best. They're not top of the totem pole in terms of liquidity, but they have a really good platform. And honestly, they've never had a single issue. Never had a single issue. A long time ago, people were trying to say that their volume was fake. Someone, a third party who was called upon by the people who were calling their volume fake, actually said, nope, their volume is legit. And they do over $4 billion in volume a day. It's a great exchange. And yeah, so they're our partners for a reason. We don't just pick people because we're looking to get paid. We only pick people we want to have long-term relationships with. All right, guys, take care.